All right, this is live. Let's talk about taxes today. This since it's April, tax day is 5 days away. I have James McIntosh, the enroll agent, and he's going to tell us all about how to get money, stop tax liens, pay off tax liens, maybe not pay them, but he's going to give us some good tax strategies
Uh-huh.
um, in regards to what we need to do as homeowners, but also to investing. What's the what's the proper way to avoid IRS liens and paying the IRS? I ain't gonna say that. I didn't say that online, did I? I'm gonna just say we need some good tax strategies to save money. How about that?
Uh,
So, so Mr. McIntosh, he is an enrolled agent. So, tell us a little bit about your background.
well, I've been involved in the tax industry, tax profession since high school.
Ooh, mm-hmm.
I started doing taxes in high school and built up clientele over the years, and um, also became an enrolled agent, which the difference between a enrolled agent and a tax preparer is I can represent an individual, a client before the IRS
That's
on
good.
any on any tax matter.
Okay.
Um, a tax preparer can only represent you on a tax return that they prepared.
Okay, that's important, right?
Mhm.
Is that the same for like a CPA or something like that? They can only represent you or
No,
just
they can
okay.
represent you. They can represent you. Tax attorneys, enrolled agents, and CPAs all have the same.
Accolades.
Yeah, have the same rights as or uh, to represent you before the IRS.
Okay, so what you're saying is you're right up there. You've been doing this for a long time. You've seen a lot. You
Mhm,
know those IRS guidelines.
mhm.
I think we had talked about this before, right? Like you know how you see those commercials?
Yes,
Um,
where you owe $1 billion and
yeah,
you
if you owe $1 billion, I owed $1 billion and I only owe one and I'm great. Is
yeah.
what is that? Is that true?
Well, it is. Well, let me put it this way: it is possible to settle your debt, your
Okay.
tax debt, for less than what you owe. And the program that they're describing is called the Offer and Compromise.
Okay.
And it is, believe it or not, it's been around since the 60s.
Mhm.
The commercials make it sound like it's a new
New thing.
thing and for a limited time only.
Yes,
But
yes, yep, that's
it's
what it
been
is.
around. It's been around since the 60s,
Mhm.
and it is the IRS will settle for pennies on the dollar, but
Mhm.
generally only if you're broke, flat broke,
You can't
uh,
own any assets,
or
no money in the bank.
you can't own anything or have an income beyond um, the basics you're required to have to live day to day.
Mm.
So, in other words, the IRS has what they call national standards,
Mhm.
and that says that, and you can just plug it in like a formula. If you are a single male living in Columbus, Ohio,
Mhm.
in this zip code,
Mhm.
this is how much money you need to survive.
Where do you find that formula though?
Well, it's on the, you can get it from the IRS website. It's
Okay.
called the national standards.
So
But
it's
there,
the national standard,
yeah,
right?
yes, there's national standards for um, mortgages or
Mhm.
mortgage or rent. There are, I mean, there's more than one set. You have to combine them all to come
Mhm.
up with the number that the IRS says you need to live in where you're living.
Okay. Now that's huge. So you got to listen to this, right? He's basically saying you hear these commercials, right? Like, oh, get your debt relieved and everything of that nature, and you pay tens and thousands of dollars,
Mhm.
and they try to get the right people, but you're going to pay money for that. But if you don't fit into a box, then you're not going to qualify anyway. So it's better to kind of like, no, that what you're saying is you really have
Yeah,
to be in poverty in order for them to really kind of work that out. Is that right? Is that kind of
yeah.
like a summary of what you're saying?
Yeah, give you an example. If you're in Columbus, if you're a single male, I think they allow you to make around $3,800. You have to make more than $3,800 or less than $3,800.
Less than $3,800 a month for a
Right.
single person, and then
Right.
they'll work with you, and you can't own anything.
Well, you can own. I mean, you can own car. You got to have a car to
Get
the,
to work.
get to work. They have those. They allow. They make allowances for things like that,
Okay,
but you can't own equity in real estate, for example.
gotcha. Okay.
I had a guy come to me, told me that he was going to get an offer in compromise, and he owed $300,000 in taxes.
Hmm.
And my first question was, um, because he had ran into some financial troubles because of COVID. His business had
Mm.
ran into some financial troubles because of COVID, but I knew prior to that he was very successful.
Mhm.
And I said, "Let me ask you, you owe $300,000 in taxes." And I said, "How much equity do you have in your home?" He said, "About $300,000." I said, "They will not give you an offer in compromise.
They will take that equity. Hmm.
They'll say get the equity out of the home. They don't care how you get it,
Gotcha.
refinance, whatever. But they'll say get the equity out of the home. But they will not give him an offer in compromise.
Okay, so that's just a gem for you guys. Just hearing these commercials, just know it's going to either cost you a whole bunch of money just to
Mhm.
get a consultation, or you're really not going to qualify unless you meet certain criteria. So
Yeah.
now a lot of people around this April 15th, they stress out because you got to file your taxes by
Mhm.
April 15th. What do you say to that? Because I. Mm,
Well, I say, well, yes, no. You have to file your taxes or an offer. I mean,
an
or,
extension.
or an extension by the court.
Mhm. That is so a lot of if I don't file my taxes, they're gonna come and get me. That's a fear that a lot of people have. And I just, I know it's not true. You gotta do something,
No,
you know.
they're not going to come get you. But one thing, one distinction that is important is it's not against the law to owe tax. It's actually against the law to not file.
Hmm.
Failure to file is actually a crime.
Oh, no, that's good to know. Failure to file is actually a crime.
Yes,
But if you don't owe, if you don't owe, do you have to file?
yes. If you
Really?
made over, or I forget, it's a very minimal amount. If you made over a certain amount of money, you have to file whether you owe it or not.
So if I was getting a refund back, right?
Mhm.
And I just wanted to wait.
Well, you could do that, but technically you're breaking the law, even though you have a refund.
Ooh, now that's a gem I didn't know. So if I don't file, or if I don't file an extension, I'm actually breaking the law, regardless if I owe or not, if I make over the threshold. I think,
Yeah,
isn't it like your standard deduction, maybe if you're single, like 12 or something?
yeah.
Isn't
Somewhat.
it
It's
like
14 now. 14. It's 14 something this year.
it's 14? So if you make over that,
Mhm.
then you're required to follow. You're breaking the law. Well, hey,
Well,
I just learned something, guys.
the threshold is even lower than that.
It's lower than that. Okay.
It's lower. It's like $1,500 or something like that.
Oh, oh, wow. Okay, well, that's good to know. All right, so let's talk about like what is it? Um, hold on, I think we're getting feedback from something. Okay, so when we look at um investing in real estate or just buying
Mhm.
a house, right? You hear a lot of people say that with the real estate it's a great tax write-off, right? They try to make it seem like, oh, if you own rental property, you're just going to be able to write off everything. And then the other thing that I heard, like, when we talk about taxes, this is just real talk about taxes. When we talk about taxes and self-employed people, I had this question that was asked of me, right? They was like, or not asked, but they said, I heard such and such or said that if you have a business,
Mhm.
whatever you write off in your business, you're gonna get that back in in tax in like a refund or something. And I said, we can't always,
Mhm.
go by what Johnny and them said.
No, you really can't, because uh, the the very word refund,
Johnny and them gonna have you in the jail.
the very word refund implies pay something. In
Oh,
order
that's a
for
good gem. I
in
like it.
order
Say
for
it
me
again.
to refund you your money, you had to have paid me in the first place.
Say it again. Say it again. Say it again. Right? Because look, right, this is so true. Like, so
Mhm.
when people talk about taxes and they talk about getting all these big refunds back, okay, if you're below a certain threshold,
Mhm.
you get earned income credit and stuff. But if you're
Correct.
above that, right, you
Right.
have to a refund,
Mhm.
something you overpaid, right? Or you
Yeah.
paid it. So I try to explain that to people. Like, well, I ain't getting as much money back as such and such and
Mhm.
Jimbo. What? We ain't you
Mhm.
not.
Yeah.
I try to tell everybody, everybody's situation is different. You
Yeah.
can't
I,
go ahead.
yeah.
Oh my goodness.
I remember this guy. His I did taxes for his cousin,
Uh-huh. Oh my goodness.
and he was single. He was single. His cousin was married with children, and he said, and I told him he owed me, and he said, "Well, how come you got my cousin a refund?" I said, "He's got a wife. He's got children. He had taxes withheld. He made quarters deposit. You haven't given the government any money for them to get back to you."
See, and that's what people don't realize. Hold on, let me try something. I think my audio's. Can you say something now?
And he was
Okay,
in
that's better.
business, he was in business for himself.
See, and so it's different dynamics when you're talking about taxes and what you do and everything of that
Mhm.
nature. I tell everybody, everybody's situation is not the same, but I get that question a lot. Why did such and such get this? Or why did, oh, such and such said that I should be getting this? And I'm like, well, such and such is not you. Right?
Right.
And we just have to really look at our situation and tailor whatever you do to what you do, right? Don't
Mhm.
worry about what the next person is doing. Just really concentrate on you and then, for
Mhm.
yourself.
Yes.
So let's talk about like with the different entities and when we talk about real estate, right? They
Mhm.
talk about real estate is kind of like a real big tax deduction.
Yes.
And then so when we talk about all of that, what is your take on real estate being the biggest, best tax deduction and everything of that nature? Because I
Well,
say it, I believe it, but
I mean,
really, go
it's a
ahead.
good, it's a good, solid uh, tax deduction. They have one of the strongest tax lobbies in the country, the real estate industry.
Hmm.
So it's really it's solid. It's a solid deduction. Uh,
So what
rent
can you
property,
do when you're
they
talking
get
about
all
doing
these-
a real estate deduction?
right.
Like what would be the deductible items that
Well,
would really be impactful to you,
the
a
big
person?
one is depreciation
Hmm.
in most cases, uh, because that's money the way I look at depreciation, that's when it goes straight into your pocket, and it's not.
Mhm. Okay. And then
But
you mhm.
go ahead.
No, I'm listening.
Any expense if you're uh, actively involved in the property, you want to be can because driving to the property, for example, is deductible.
Did you hear that? Driving to the property is deductible.
If you
Mhm.
are actively managing the property.
Mhm.
Now, if it's a passive investment, say for example, you and I get together and we own the investment property and third party manages it, then driving to that property would not be deductible because then it's
Gotcha.
passive income.
Mm. Okay.
And
Okay.
passive income can only, your deductions from the passive income can only be, uh, yeah, the deduction from that property, if you're in a situation where it's passive income, the deduction can only be applied if it's
To passive
passive
income.
income. It can't be applied if it's your earned income.
Okay, so let's clarify for everybody. So passive income is just think about it. Passive. Somebody
Mhm.
passing you by. You're not doing anything, right? They're just
Mhm.
going by, right? So non-passive is like they're not passing you by, you're actively engaging in that business, right? So that
Correct.
would be the
Correct.
difference. I'm actively engaging in it, I'm advertising, I'm I'm working in it as opposed to passive like it's investment group maybe,
Mhm.
right?
Yeah.
That would be more
Yeah.
of kind of
Because,
like that.
yeah, there's a group of us get together and buy a piece of property. Uh, any loss, any losses would only apply to offset the passive income. Any other passive income we might have.
I got you. So, okay, great. But non-passive, if I'm active, then that's when the real,
Yeah, that's
the
when
real,
that
because it,
yeah, my advice to people that have rental property that they manage is
hmm
just keep a receipt for everything. You never
yeah,
know what could be deductible.
there you go. That's always what I say too. If it's all about you. Okay, so what is the major benefit, right? Tax wise, we're just talking about taxes today.
Mhm.
Um, tax wise, with holding your real estate in the LLC or just in your name? Is it a difference?
Tax wise, no, really, it's no, it's it's a more of a legal issue, liability issue. You hold the property in LLC because because the IRS actually prefers that you put that on Schedule E if you own, like for example, the clients who own multiple properties and they put it on Schedule E, which is just a schedule
Mhm.
attached to your your return.
Okay, is there another way to hold real estate if you hold it in the LLC that would be a better tax strategy?
Well, if you are if you're a sole owner,
Mhm.
no,
No?
you're
Okay.
going to wind up with the same deduction. You're going to wind up with the same deduction if you were not in a LLC.
So when you're
The
talking
LLC is going to shield yourself from liability.
okay, that's what I was about to kind of like explain, right? So basically, the entity structure just kind of
Mhm.
shields you from liability,
Right.
right? Okay, well that's good to know. So let's shift over to like the self-employed people, right? Like with self-employed people, you know, like I'm mortgage specialist, right?
Mhm.
And I always say, well, you may have a lot of deductions, but my philosophy is pay yourself as
Mhm.
opposed to paying the IRS. And so if you have a lot of people, they have a lot of deductions, my self-employed people, and they want to buy a home. But then other people say, well, you claim more income, maybe not take all your deductions and everything of that nature. I said, well, you want to, pay as less taxes as possible because you have all these legitimate expenses, but there is another way to, get a loan, being self-employed and not having to not show your deductions, right? There's other ways to do that. But one of the things I kind of want to focus on today is, what are red flags deductions for self-employed people? Like that, if you go overboard on this, you're just automatic. It's automatic audit.
Well, like many things in tax, it depends. Um, for example, it depends on what business you're in.
Okay.
If you're whatever business you're in, if your deductions in a particular category are way outside the national averages, those are the things to get you out of
Oh. Again, how do we know what these national averages? Okay, so I actually went through an audit like
here.
earlier. It had to be like 15 years ago, right? And
Hmm.
my red flag was um um mileage.
Hmm.
And I was doing real estate then. So I was driving a lot,
Yeah,
right? So that
that's
was
a good one.
that I know. So that was for me, that was the ticket. It was like, oh, I said, well, why? And that's more so what they focused on for me was the mileage because it was so, but man, my heart was pounding. Boo boo. I'm like, what did I do? I'm looking under couches for receipts and everything of that nature. And I
Mhm.
had all of this stuff. And I just really had to document my mileage. That was the biggest thing.
That was
Mhm.
big. Yeah, it's still a big thing.
Oh, okay.
People think I've I've ran across some people that have had some really, really bad tax advice.
Mm.
From tax preparer, uh,
Hmm.
uh, tax preparers had never done a business tax return, and then their client goes to business so they do their return, and they didn't. Um, they didn't understand business deductions and what was allowable. They didn't do it on the right form.
Hmm.
The guy,
Oh.
the guy drove a truck, a semi,
Hmm.
and, and the guy that prepared his taxes took mileage.
The guy who prepared
The,
taxes.
the truck driver's taxes took mileage, like 60 cents a mile or something like that, which you
Oh.
can't do. Uh,
w-
what's right on the form? The the truck has to be below 6,000 pounds or something like that.
Mhm.
Uh, the
And
the truck or the vehicle has to be below a certain weight, and
mhm.
so semi you can't deduct mileage.
I hope you guys who got a semi, your tax person is doing it right because
You can
um
deduct depreciation, which I I noticed that a lot of truck drivers. I've done a lot of work with truck drivers recently, and I noticed that uh, almost with a with only a couple of exceptions, they didn't depreciate. Whoever was preparing the return did depreciate mm, depreciate the truck.
Oh, okay. Now, this is a gem, right?
Mhm.
When you're looking at depreciation in the mortgage industry, like on your taxes, they take that away, right? That reduces your income, but it's the opposite in the mortgage industry. I'm
Mhm.
not telling you how to do your taxes or what to do, but that's a strategy. I'm all about
Mhm.
strategies, right? So that's a strategy, when you have some expenses that you are looking to do, and they cause for depreciation, and you want to kind of look at your tax bill and tax do strategically. Depreciation is one of those good feels that we like.
Yeah.
It helps you kind of like all
Mhm,
the way around and everything. So, should people, like especially self-employed people,
mhm,
like um like some of the clients that I serve, they're like, it seems like after COVID, right? When COVID hit, a lot of people start doing businesses. Businesses kind of like exploded. Like people
mhm,
like they were at home, they started the side hustles because
mhm,
they were at home and they wanted to do something. And then that turned into a full-time self-employment gig, right?
mhm,
But then they didn't transition from being an employee for someone else where they do the W 2,
mhm,
right? And being your own boss, now you have a tax bill to do. So
mhm.
then we just ignore it. That's not the proper way to do it, right? You
No.
just ignore it like, oh, well, I didn't file my taxes. And it's like, dude, like we're waiting. Like, did I fall under the radar? How likely is it that if you don't file your taxes, that you're just gonna continuously fall under the radar? And that's a huge risk, as by the way.
Well, it depends on a number of things. I'll give you an example. I met a guy who who had the unusual uh, saving strategy.
Mm-hmm.
Every year, he would have gotten a refund on his
Mm-hmm.
taxes.
Mm-hmm.
So he waited until he retired to file his tax.
Oh.
But you can't. You thought you could go back and file 30 years worth of taxes and get
Wow.
those refunds,
Oh.
and the government would be paying you interest on that, and you can only go back to the
You can only go back 3 years
for a refund.
for a refund. Now,
Yeah,
question: what if you don't file your taxes?
uh,
How far can they go back? They can go back,
they
right?
they can go back. Technically, they can go back. Well, not technically. Law says they they require you to go back 6 years.
So
They'll
six,
require you to file the previous 6 years.
okay, but you can only get a refund for 3 of those years,
You can
right?
only get a refund for the previous three.
Oh, so now that's crazy. And I'm only saying that because knowledge is power, people. Knowledge is power. He had 30 years of money just sitting there,
Mhm.
right? So probably if he can only go back 3 years, you still get interest for those 3 years, right?
No,
Because you don't
no,
get
mm,
interest from the
no,
IRS if you
not
don't
not
file.
if you're not if you're filing late.
Oh, see? Okay, not if you're filing late,
Mhm.
right? But okay, so you can go back 3, so that was money he coulda used.
Yeah, it's
Wow,
money he
that's a
donated
lot of
to the
money.
government.
Yeah, just and a lot of times we do okay, when I say you're getting a refund and you don't have like, you didn't properly tax strategize and plan, right?
Mhm,
You now you get a refund back. If you're getting a large refund, that's basically you're allowing the government, right,
mhm,
to use your money for free,
mhm.
right?
Right.
I'm That's what a refund is. A tax refund is now we're not talking about when you're getting the credits and everything of that nature. We're
Mhm,
talking about your actual money.
mhm,
You pay $5,000 in taxes, right? And then at the end of the year, with all your stuff, you're getting 2,500 back.
mhm,
You just gave the IRS $2,500 to use
mhm.
however they see fit with
Yep.
no interest.
Exactly.
And you could have put that if you balling like that, I can do that. Yeah, I mean, let me borrow $2,500 and then at the end of the year I will give it back to you, right? With no interest. I would do that. Like that is like I want that. So whoever is getting a refund, can I hold that for 12 months? Right? And I promise on everything
Mhm.
I will give it back at the end of the year.
Yeah.
Your 25, I will hold, let me hold that. That's what we
Mhm.
basically said. Let me hold them dollars. Oh,
Right. That's exactly it.
oh, okay. So how long? Okay, let's talk about tax liens now. How long? Wait a minute. I want to go back. So we talked about getting a refund. We talked about you have 3 years to go back, but you have 6 years, right?
Mhm,
So now I owe. Now let's say I owe, and I'm in a payment plan, right?
mhm.
Then is it so? What's the time limit that the IRS can really collect the money from you? You told me this. This is a real important gem, you guys.
10 years from the date the tax is assessed.
Oh, is assessed.
Is assessed, or for example, let's say you file your taxes April 15th,
Mhm.
and
Mhm.
the clock starts then.
Oh, it starts then.
Yeah,
So
but
10 years.
for if you if they get a hold of you 2 years from now and you haven't filed, um, and you didn't file then that's when the clock stops. Basically, it starts when you get or create a tax bill.
Oh, okay. So it's not that, hey, I and so 10 years from now before it would be 2015, right?
Right.
So if I didn't file in 2015 and I owed in 2015, I can't get rid of that bill, right?
Well, you
Be-
can, but the clocking it doesn't start.
But I didn't file. Like, so
So,
if I
so
filed in,
you
so if
didn't
I go
file,
ahead.
and they have to assess you because they can't. Oh, this is another thing people need to know. There's a thing called a substitute for return.
Was it
If
substitute what?
for return
Substitute for
for
return.
return, if you don't file, the IRS can file for you.
Oh yeah, yeah. I had
They,
some clients
they,
do that. Mhm.
yeah, they take W-2s that are filed with them, uh, and they'll take the 1099s, interest statements, all of it, and they'll create a return.
You
And
don't want that.
no, you don't, because
You do not
even the
want that.
IRS will tell you you're guaranteed to owe.
Yeah, you never want that. That's just like when people don't um maintain their homeowners insurance. The
Mhm.
lender is going to provide forced insurance on you. They'll give you a time period in order to get insurance, but if you don't, they're going to get their own insurance and it's going to cover them, not the property, and it's probably going to be double and triple of what you could get on the market. So, if anybody ever do something for you, you don't want that because they're looking out for their best interest, not yours. Just a key point. So yeah, I've had people who've had that happen. They like, well, yeah, I owed. I said, yeah, because they're just looking at the documents they have. They don't care about anything else.
Well, they don't know your deductions.
Right. You know what I mean? So they're not going to call you and say, "Hey, we have all these documents. What did you spend?" No, they're not going to do that.
Mhm. Exactly.
Okay. So let's talk about tax liens. The
Yeah.
good, the bad, the ugly, what could
Mhm.
actually happen if you
Mhm.
have a tax lien.
Well, depending on the situation, uh, the tax lien can be removed. Uh,
Tax liens can be removed.
a
Okay.
tax lien. Now, this is federal.
We're talking about federal taxes, guys, not state or
Yeah,
city or
state.
whatever. We're just talking about this is an enroll agent for the
Mhm.
IRS, not for the city
The
and state.
state, the state of Ohio, in particular, you want to do everything you possibly can to keep them from getting a lien
Yeah, it's so hard to get
because
off.
they won't release
Hmm.
until you pay them. They
Yeah.
they totally won't.
So are you saying that you can have a federal tax lien to get removed without paying it?
Well, yeah,
Mm.
yeah. I mean, you have to have good reason to have the lien removed. Uh, but yeah. you can for example, you want to sell your house.
Mm,
Uh, they will subordinate. They will
mm.
subordinate uh, the lien in order for you to sell the house.
And then they'll get paid off.
Correct.
Oh, so that's good, you know.
And there are situations where they will remove the lien, um, but it's in case by case basis.
Mm. It was this one situation I had that she owed, like she didn't file her taxes and she knew she owed to. She didn't tell me.
Mhm.
So, it came out. She knew she owed this portion and she told me about that, but then it was the other stuff she didn't tell me about. So we were knee deep into the file, and
Mhm.
then it was all these other things that came out. And so it was something that was worked out. Can't you work out like a plan or something like that in order
Yeah,
for them?
you can work out cases like people get these letters saying that they'll revoke your passport and so forth. You can
Hmm.
work out a plan. You can work out a payment plan to avoid.
So, that's one of the things I like to say. It's like you need to be whatever professional you're working with, right? You have to be totally honest. Like people think like me doing mortgages, I tell everybody I'm your first line of defense, right? Like I'm here to help you achieve your goals in home ownership and build wealth through home ownership, right? That is just really my mission. So I need to know it. I need to know everything before we get knee deep into
Yeah.
the process, because then we have resources. We have people like, if you have tax liens, James McIntosh, to really know what he I don't know it, but I know the professionals to get us where we need to go that knows the laws, as opposed to TikTok, Facebook,
Yeah.
Instagram, like, the influencer that's just trying to get a million views by
Yeah.
giving you a till tax code, and it may not apply to your situation.
The
And so
work.
that's just,
Go ahead.
that's my public service announcement, because I tell you I go through that.
Yeah. Yeah, I'm saying social media is the worst tax advice of all time.
Oh, okay. So I heard this, right? Like, and I was like, I said, So it's this guy talking about right off like everything. And I was like, like you can put all your money into a 401k or something of that nature. It was like, what you gonna live on?
Mhm.
I'm just saying, because you gotta put it in there. You
Right.
can't like not.
And
So
when you take it out, it's
we
taxable.
what are you gonna do?
Well,
Okay.
I've seen, I saw a video where the guy was telling people that you sew your name in your suit, it becomes a uniform.
Oh,
And
yeah, is that
it is
true? Because
actually-
I got all of these T-shirts.
no, that is absolutely
Well,
not.
this is like advertisement, right? Like,
No,
this is a uniform.
a uniform is something that uh, has let me see, what is the word? It has no practical use outside of uh, where it supports your official function.
Well,
Like,
this is advertising. I
okay,
this
yeah,
is a this is advertising expense.
you
It's
could
like
you
a
could
bill.
you could you could arguably write off the purchase and printing of those shirts
Right.
as advertising. Yeah, you could do that.
Yeah, this is advertising. This is
But
merch.
but just like the purchase and the printing, not writing it off every year. Like he he's talking about you can write off
Oh
uh,
yeah.
the dry cleaning because
He and he doesn't have any business, do he?
the guy that did the video, I think he does,
So the dry cleaning, and just because he put, oh, okay.
but that's
Okay.
not. But that you can't do that.
You can't deduct that. Okay.
And you
Okay.
can't, this one list was on, and believe it or not, people don't believe this, but the IRS watches. searching social media for this very kind of crazy advice.
Oh, I'm not giving crazy advice. We're
Yeah,
just trying to tell people. I said go with the
right.
professionals. This is
No,
my public service
no,
announcement. I'm not giving any kind of false advice. I'm just
no.
saying I use my t-shirt. It's an advertisement. See?
Yeah, well, that's a legitimate advice. But there was a lady on I don't remember what social media channel, but she said she wrote off her entire wedding as a business expense.
Her entire what?
Wedding,
Oh, okay. Well,
and
I'm
she,
not out here saying that. Like, look,
but you can't do that.
I'm okay. Okay, you can't. Oh, what if you're an influencer
Yeah, she
and
influencer, but
and I'm and
your
I'm
wedding is not. No, they
okay.
won't allow.
We're just saying he's been doing this for like years and he is an enrolled agent. So know all the loopholes and the guidelines and stuff. So push it at your own risk. But that's not what we're talking about.
Mhm.
Mr. IRS man, don't come. This is a truthful channel, real talk. It's real talk, real guidelines, real professionals. So that's
Yeah,
what I'm about here. And
mhm.
one of the things tax season is coming. Well, it's here, right?
Yeah, it's almost
Do
over.
not, it's almost over. You can file an extension. A lot of people do, but
Mhm.
if you owe, you need to pay that at least something towards what you owe, or it will be interest and what would that be? Like if you
There,
owe money and you
there's
don't file.
interest and penalties. There
Interest and
is
penalties.
if you file your uh, tax return late, it's a penalty.
hmm hmm It's a penalty. So you want to, if you can't file, then you file an extension, right?
Right.
Like just
Yeah. Even if you file an extension, if you owe, there's going to be a penalty.
penalty for not paying,
Right. Well,
not filing, right?
yeah, there's a late there's a late fee.
Yeah.
Paying your taxes late. It's a fee for that.
It's a fees for fees. Fees and fees and
Mhm.
fees. When you're talking about the IRS. So you want to have a good tax plan, a good tax strategy plan, and everything of that nature. I want to kind of this one client, this was a strategy they used, right? So this I don't even know if I'm scared to talk on tax strategies now because if they swoop in the internet. Okay, so this is a real estate strategy, right? So what if you have like people that you know, right?
Mhm.
If you want to write off your whole life, right? You don't own a property in your name, right? But let's say for instance, I own a property. I rent it out to my sister.
Mhm.
She owns a property and she rents it to me, right? So now all the expenses, right? Because it's an investment property to her. We
Uh,
both own. It's an investment property to her, an investment property to me. So everything that she technically does, I didn't say I do, but she technically does, it gets to be written off, updating the house and everything of that nature. Is that true?
uh, that's tricky
Well, it's an
because
investment property.
yeah,
I'm paying the rent, which is
but
the
it's
exact amount of the mortgage.
uh, so it's not nothing great.
That's a strategy.
No, that is what I should say it's not a strategy. However, there are conditions for being able to write off uh, the expenses of a rental property where the tenant is an immediate relative.
Oh, it's conditions? Okay,
Yes.
what's that conditions?
Well, one, they have to be rented market rate. Right.
Okay.
Um, and it's got to be uh, the transaction has to be uh, a hand blank transaction with leads and all of these other things.
Oh, like a Hands length
It can't be
transaction.
a, it can't be a handshake. Uh, you rent to your sister for whatever you rented to her for, and there's no lease.
Oh, okay. You have to do it by the board. We need leases in place, right? We need leases in place. We need to make sure we're paying market rent, right? Hmm. Okay. Hmm. That's something to think about.
Mhm.
We just want to make sure that whatever strategy we're doing it. We're looking at the taxes, we're looking at the protection, right? When we're
Right.
talking about real estate investing, because we don't want to end up with a huge tax 300,000 tax bill like your one of your other clients,
Mhm.
did. But I know you kind of worked that out. I bet you did. Um, you
Well,
know, by
actually, it was two partners,
oh, okay, gotcha.
and a they had a $300,000 tax
Tax bill.
bill for it was a business, but they hadn't paid payroll tax. And when
Mm.
you don't pay payroll taxes, they can come after the owner personally.
Oh,
And that
okay.
was the situation they were in. I did a workout for his part,
Gotcha. Hmm.
so the IRS don't care who pays the money, they just want the money.
They want it all
Because
worked out.
if there's five partners and one of them pays, that's fine.
Oh, okay. All right. Well, whew, you got me thinking now. The moral of the story is file your taxes. Don't play with the IRS.
Mhm.
But if you are in a bind, you want to work with the people that can kind of help you and really advise
Mhm.
you honestly and everything of that nature. Don't be afraid. A lot of people, like, they're afraid because it's like, oh, I don't know, and I think ignorance
Mhm.
cost you a lot of money. it
Yeah.
it really does. So
And
let's get.
one thing that I've been stressing is that people, particularly people that go from being uh, a W employee, self-employed,
Hmm.
they need to do tax plan.
Tax planning is the key. Everything you need to do a plan, but
Mhm.
tax planning is huge.
Because will you can get your you can get your tax bill to the point where uh, you're not owning you're not owning any money interest rate.
Okay, that makes sense. And then also when you're doing a tax strategy and you're having a tax plan, it's like it's like you're being proactive as opposed
Right.
to reactive. And that's the really the key in everything, especially when you're looking to prepare for a home too.
Mhm.
Everything, it's all about planning, um and working things out, and everything works together. Okay, do you want to leave the people with some parting tax advice, thoughts, red flags,
Uh,
hit us with some knowledge.
hmm. Well, one thing I will tell you is don't don't hide the problem. I mean, don't open the envelopes.
Oh yeah, key facts.
Open the
Open them envelopes, people.
open the envelopes. The problem will not go away if you ignore it.
Yes,
But
yes.
also, don't be scared. The IRS puts very few people in jail,
Okay, there you go.
and owing again, owing taxes is not a crime.
Hmm. Owing taxes is not a crime, but they will take your money. They
Yeah,
will go into your bank account. I'm just saying. I
that's
do know
true.
that.
That's when you let the letters stack up and you ignore them, they'll
They,
take your money.
okay, so don't let the letters stack up so they
Mhm.
won't take your cash.
If they contact you, make sure you contact them, even if you can't, es- especially if you can't afford to pay.
That is so true. I tell everybody too, like when people get um those mail, like collection mails from anybody, right?
Mhm.
Because it was like a period in time. Capital One was very huge on, I don't care if you owe like $300, they
Mhm.
were taking you to court to get
Mhm.
their money, right? And they were garnished and all these things. And I think they started doing that more because they didn't go down there to contest it, right? It was
Right.
like, what? Well, yeah, that's like free money we're going to get because you're too scared to go down
That's a
to
default judgment, and then you just take the
the,
paycheck.
right. So, and I had this one of my friends, it was huge. She went down there and she just went down there and said, "Hey, this was the situation." And they forgave it. Like she didn't have to pay anything. So, the moral of the story is taxes, credit cards, judgments. If you have a judgment, open your mail, people. Just
Mhm.
open the mail. Like, don't be afraid. Like, just open it up and say, "Hey, call them. I can't afford this."
Mhm.
And go from there, but don't be afraid to
And there's a lot of
programs, workout plans.
programs if you can't afford to pay.
Yeah. Okay. All
And
right.
there's an alternative to the offer and compromise. It's called a partial payment agreement.
Ooh, did you hear that? Partial. So we got some good gems. Okay,
Mhm.
so if you got a tax bill that's 10 years, right?
If
And
it's
it's
10 years,
years,
if it's, yeah, 10 years. At 10 years, it expires. I've
10 years it expire.
Yeah, I've had clients reduce their bill substantially uh, by taking advantage of that.
That's huge. Okay, and then we talk about the offer and compromise where you hear all those commercials, but you
Mhm.
have to qualify, you have to be in that national average type of deal.
Yeah, very few
And
people qualify.
very few
Very
people
few
qualify.
offers and compromise get approved.
Mm. And then the other one is a partial payment. What is that?
Partial payment agreement. That is
Oh,
where you agree to make monthly payments over a certain period of time, but the total of those payments will be less than what you owe.
hmm. So that's another strategy, right? So for those of you who do owe, these are things you want to think about. You want to contact professional people, professional people, not TikTok. TikTok. I like TikTok. I'm on TikTok. I hope they let me go live one day. But I like TikTok. You know what I'm just saying? Like just the information that you get.
Mhm.
Trust but verify. Anything that I say, trust but verify as well. You just want to, make sure that your situation is your situation and it's not what Jim and them passing.
Yeah.
Okay, we're signing off. Thank you guys for watching. I appreciate it. James McIntosh, Google, give your information because
Oh,
that's where
yeah,
you want people to reach out to you, find you
James
on social media.
McIntyre, 614-403-8943.
All right. Thank you so much. Have a good
All right.
night. Bye.
Bye.